There are certain ideas and rules that you get taught at the beginning of your trading journey that it's meant to guide you in a certain direction in terms of how you conduct yourself in the markets. These rules usually have positive intentions. They are supposed to teach you some fundamental truths about how to operate in the FX space and how to operate on charts. But the problem with these rules are there are some that if you get to a certain point in your journey, they end up being a hindrance as opposed to something that can help you. So today I'll be going over 5 trading lessons that you were taught that were good at the time you were taught, but now is potentially holding you back. Sure. The first one is this idea of buy low and sell high. It's this idea that we should be buying market bottoms and selling market tops. It's simple. You're supposed to be, in theory, buying in discounts as opposed to buying when the market has peaked, right? Or when the market has dropped significantly. The idea itself sounds logical, and the idea is from the stock trading space. When market is in a bull run, we wait for pullbacks, or people that trade stocks wait for pullbacks to buy the market at discounts. The problem with this concept is the fact that we as day traders we tend to operate on intraday time frames as opposed to catching long-term stock directions. So what might look like a low might just be market finding a space or pulling back temporarily before it continues that overall trend. The thing is, we don't know when a trend has changed. So what you find yourself doing is you're trying to catch reversals as opposed to trading with the market itself. It's easier to take buy and sells when the market is trending up or down with a clear directional bias as opposed to waiting for the market to either bottom out or top out. If you're trying to constantly catch the tops and bottoms, you'll find that most of your trades go against you. You can use the concept itself to help you analyze the market, but you should not be using it solely as a directional guide of this is when I buy and this is when I sell. There's a lot that goes into if you're on the technical analysis side of things, there's a lot that goes into finding a perfect trade setup. You're waiting for markets to come into a specific zone. You're doing your analysis and then sitting to wait for markets to come to a specific zone, touch set zones, and then continue in the direction you want the markets to go. It's not as simple as waiting for bottoms and waiting for tops. Again, if you keep chasing tops and bottoms, you find yourself usually on the wrong side of the thread. Okay, so that's the first one. Buy low and sell high can be a hindrance to your technical analysis and your trading journey itself. The second one is this idea that you shouldn't be trading live markets instantly. You're supposed to trade demo accounts for months on end. And then after you have successfully traded demo accounts, then you can now move into the live market conditions. In theory, that sounds good, but the problem is you cannot replicate the how should I explain this? You cannot replicate the jeopardy that is involved in the live market conditions on demo trades or on demo accounts. So as much as you can familiarize yourself with the trading platform you're using demo accounts, but as far as your strategy is involved, you should put skin in the game early if it's possible for you. Learn what it feels like to take a losing trade with actual money. Have skin in the game. Have that in-market experience as opposed to trading on this plaything that does not count. So if you can put money early, have losing trades early, and learn how it feels early, that would significantly cut down your learning duration as opposed to if you're going through demo phase. Because if you go through demo phase, when you come into live markets, you would have this certain expectation that okay, things are supposed to be in a certain way, and then it would be this shock when you realize that there is this significant gap between trading the demos and trading live markets. So if possible, if you have the ability, try learning through the live markets as opposed to learning on demo accounts. The third one is this idea that you should be trading like a robot. There is no such thing. You cannot trade like a robot. The whole idea of trading like a robot is this concept that people have created to somehow make themselves look like they have transcended the markets and they don't feel emotions any longer. But I can guarantee you that you will always trade with emotions, and there isn't anything inherently bad with trading with emotions. The problem is when you allow that emotion to be the overriding reason why you're taking a buy or a sell. So if you're allowing the emotions to dictate what you're doing in the markets, that is the problem. But then we need emotions to function in the markets. If you don't have emotions, you won't have that understanding of what risk is. You won't have that. You need a bit of fear to be able to understand if I put this amount of money, I will be able to lose it. If you don't have emotions, you won't have that appreciation for what risk is. So instead of the whole idea of trading like a robot, what you should have is a balanced emotion, not too negative and not too positive, just balance, constantly operating on discipline, as opposed to again trading like a quote unquote robot. Possible. The fourth one is trading is 90% psychology. There is no such thing. This is a made up statistic to emphasize the importance of psychology in the trading. And don't get me wrong, psychology is very, very important, but trading is a dance between your psychology, your technical analysis, and your money management. You're constantly juggling between these three to be consistently profitable. The most important part in trading, your technical analysis and your money management gives you your edge. Your edge is arguably the most important part of your trading. And then your psychology gives you the mindset to be able to trade said edge. So it's the balance between the two, your edge and then the mindset to be able to trade that edge. As far as the 90% psychology part, that one now offer. So yeah, find the balance between your technical analysis, money management, and the edge it creates. Then find the mindset from your psychology to be able to trade said edge. The fifth and absolute worst one is the statistic that 99% of the traders fail. And the irony with this one is that it is not made up, right? It is true. 99% of people who end up dabbling in day trading end up failing. But here's the context that people tend to leave out when they use this statistic. This 99% failure rate or attrition rate translates into every single new endeavor you're going to start. If you're opening a restaurant business, there's a 99% chance that it will fail. If you're going into logistics, there is a 99% chance that that business will fail. The context is it is not an FX specific statistic. It is a statistic based on people's failure rates in terms of starting any new endeavor. So without that context, it's easy to just see it as or see it through the lens of FX is this space where people go to fail. If I was to go somewhere else, I'd be more successful. That couldn't be further from the truth. You can decide to chase something else, but I guarantee you that when you go to chase that something else, that same statistic that applies to FX and day trading would be applicable there too. So it's more of choosing your own poison. But yeah, as far as the statistic itself is concerned, it has nothing to do with you or your journey that you're going through. You should see it, acknowledge it, but then appreciate the underlying context of the statistic itself. Don't be afraid because you see the statistic and it shouldn't hold you back. Just keep doing what you're doing. So those are the five I could think about right now. But I am sure there are a lot more that I am forgetting right now. So if there are more you feel like should be on the list, you should go to the comment section and I'm very interested in knowing what they are. And if you like videos like this, consider liking and subscribing. See you in the next one.